For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
Welcome to the Simple Side. Market beating picks inside. There's no jargon and no time to waste. Join the Simple Side and end up in first place. Welcome to the Simple Side. Market beating.
All right, welcome back to The Simple Side, one of the only financial newsletters that keeps track of everything they discuss. Good morning, shareholder. Here are today's quick updates before we get into the market action we saw this week. I just want to update everybody and let them know that the Simple Side website is in the process of being updated, and the final version should be available in just a few months. But it is incoming, so be excited for that. I know I sent out the beta link a while ago. If you're listening to the podcast, you can go and try to find it. It is thesimpleside.news. If you just put that into your browser, it will come up. It's in the process of being built, so don't expect anything too amazing there, but it is being worked on. Also, we are in the final sprint of releasing our copy trading on platforms. Of course, this will allow subscribers to copy my exact portfolios, the same ones that I report on in this newsletter, and the same ones that have returned over 280% since 2020. So be excited for that as well. Again, I sent out my letter to investors for 2025 not too terrible long ago, about 2 weeks ago. So go and check that newsletter out if you haven't seen it yet. And I just want to remind all of our paying subscribers that they have access to that Google spreadsheet with all of the 2025 buys, the weekly portfolio, our contrarian trades, and a new dashboard that showcases all the returns. And if you're reading the newsletter or reading along with the podcast, or if you're not, I guess, go to thesimpleside.substack.com and you can find the newsletter there. And in the newsletter, you will be able to see a quick little snippet of what paying subscribers are getting to see in that spreadsheet. It's showing our returns, annualized returns, year-to-date returns, and our top performing stocks, of course, with some things hidden. So go and check that out. Of course, you have to be paid to get access to all of this, so go paid and join that spreadsheet, get access to all of it. Now, let's talk about the past performance, of our weekly trades. So this past week, of course, we sent this newsletter out. Last weekend, we said, here are the stocks you should buy for this week, and here is how they performed. Over the past 26 weeks, that's how long we've been doing this, about 2 quarters, we have returned 18.48%. In correspondence, the SPY has returned 9.78%. So we've nearly doubled the SPY's returns over the same time period. Annualized, this translates into a 36.97% return for the Simple Side picks and a 19.57% return for the SPY. Again, if you're reading the newsletter, which you can find at thesimpleside.substack.com, you can see a graphic that shows the graph of growth of our returns versus the SPY in our newsletter. Go and check that out. I also have a quick little performance tracker here. It just shows the past week versus the SPY, how we were performed, the past 26 weeks, how we performed, annualized performance, and all of that good stuff, including the buys that we had for last week. So go and check that out. All right, let's get into today's reporting. Of course, for any subscriber, whether you're free or paid, you're going to get access to our politician trading report, which includes a politician stock highlight, an insider trading report, and an insider stock highlight, and some portfolio updates from our flagship fund or other portfolios that we've put together for subscribers. Premium content, of course, is for paying subscribers only and is limited to, well, I guess not limited to, there's a bunch of stuff in there. Our weekly buy opportunities, mergers and acquisitions news, top investment ideas, microcap picks, and expected stock movements from options trading. All right, let's jump into this politician trading report. And if you're wondering why politician trading matters, well, it matters a lot. In 2024, the top gaining politician was David Rouser, who returned 104.1%, and he was followed closely by Pelosi, who returned 70.9% over the year. Now, this report tracks the 5 most recent politician trades that happened this week. Of course, we track the 5 most recent ones so that you can try to capitalize on them the easiest if you decide to buy in. And we also track 2 ETFs, NANC and KRUZ. Those are the ticker symbols. And those track Democrat and Republican trading. Over the past 30 days, we've seen 13 active politicians make 92 trades with a total trade volume of $25.96 million. And how did that fare on the 2 ETFs? Well, NANC, the Democrat tracking ETF, was up around 3.93% this past week, down 1.55% over the past month, and up 1.68% year to date. Cruise, on the other hand, the Republican tracking ETF, is up 5.16%, up 0.49% this past month, and up 4.05% year to date. All right, let's talk about our politician stock highlight. This is, of course, one of the 5 most recent trades that politicians made that I find the most undervalued or the most interesting. And this week, we're going to talk about Airbnb. Of course, Airbnb is a well-known company in the hospitality sector. Currently, my model, based on profitability, growth, intrinsic value, momentum, and financial strength, says that Airbnb is undervalued by around 20%, and it ranks the company as an 8.5 out of 10, which is relatively high. Most stocks that are above a 9 we consider to be the best of the best. Now, these numbers are impressive. 20% undervalued, 8.5 out of 10. Those are pretty impressive. But there are 2 issues that should or may scare investors away from investing in Airbnb. The source of these issues, risk-adjusted returns. Now, risk-adjusted returns are a fancy way of calculating how much a stock is likely to grow based on its volatility. What are your returns going to be relative to how volatile the stock is? And the stock market has a few metrics that we can use to track these risk-adjusted returns. The main 2 are the Sorrentino and the Sharpe ratios. A Sorrentino ratio tells you how much extra return you will receive for potential downside risk, and a Sharpe ratio tells you how much extra return you will receive for total risk. In Airbnb's case, these do not look good. It has a Sorrentino ratio of negative 0.2% and a Sharpe ratio of negative 0.15%. This basically means that you are taking on the risk for negative extra returns and are experiencing more risk in doing so. The simple way of saying what I just said is these stocks, Airbnb, for example, is extremely, extremely risky and does not have the upside to cover the risk that the stock is offering. Safe investors should treat it like that weird van you always see in the park and stay far away. If you want to see the other 4 most recent trades, you can go and check those out at thesimpleside.substack.com, and there's a little graphic you can go and look at that shows you the politician, the stock they bought or sold, whether they bought or sold it, when the publish date was, when they actually traded the stock, how many days it took them to file, the size of their transaction, and the price of their transaction. All right, into insider trading we go. Here we track the ticker symbol SURE, sure. And the monthly buy-sell ratio for insiders this week is 0.29, which is below the average of 0.40. This indicates a slight sell in the markets from insiders. Sure is up 2.68% this week, up 0.35% this month, and 3.88% year to date. And we had a really interesting insider buy this week. I don't even know how to say this name, so excuse me for saying it wrong, but it's Revoyant Sciences Limited. Topped the charts this week with the largest buy, a $300 million purchase of Immunovant, ticker IMVT, ticker IMVT. The stock is up over 4.6% this past week, but is still down year to date 5%. Now, this is an extremely interesting buy. For one, the company is sitting at a 52-week low. However, the company is also up over 600% from its 3-year low of $3.38. Now, my model ranks the stock at a 3.4 out of 10, and the company is lacking in basically every department except for its financial strength. And of course they're not, because they've just had $300 million pour in from an exterior investor. Now, this large buy could indicate some insider knowledge of improving metrics within the company, And analysts seem to agree. The average analyst prediction puts the price of IMVT at over $50 by the year's end, which is a 111% upside. But I'm not sure if I feel the same. Using those same metrics we looked at with Airbnb earlier, the Sorrentino and the Sharpe ratio, we get two values that are even more negative. The Sorrentino being negative 1.83 and the Sharpe being negative 1.84. You're staring down double-barreled poor performance by buying the stock. So again, the risk here is not outweighing the reward. And if you want to see the other four most recent trades, you can see those again by going to the newsletter, thesimpleside.substack.com. All right, let's talk about our portfolio update. We have something really interesting happening this week, and we have a stock that we're putting on the watch list for sale this week in the portfolio. And you can see the key change below if you're a paying subscriber. But let's talk about our flagship fund update. What we've got going on in the flagship fund is great outperformance for the beginning of the year. We rebalanced this portfolio on January the 2nd, and we are currently up 3.75% year to date, while the SPY lags at 1.39% year to date. You know, while we are handily outperforming the SPY, we're only 2 weeks into the year, and so this is very likely to change. But if you want to get daily updates, actually, I guess updates every minute, every couple of minutes, you can go to our Google Sheet. Again, if you're a paying subscriber, go to that Google Sheet. Soon this will migrate to the website, but go to the Google Sheet and you can get access to everything that's happening in real time. Go and check that out. Now, last week I talked about my top pick for 2025. I gave it away even to free subscribers. It is KLAC Corporation, ticker KLAC. The company specializes, in optimizing the production of semiconductor chips. And last week when I mentioned the stock, it was up a cool 7.62% year to date. Now, just 7 days later, the company has surpassed double digits return, nearly twice over, sitting at 19.34% returns just this year. That's over 1% a day at the time of me recording this podcast, which is on the 18th. So over 1% a day so far this year, and we're happy with that. Not sure if these returns will be sustained. However, we're happy with the performance. Now, if you're a paying subscriber, you can continue listening to the podcast and you're going to get some awesome information on a stock that we're putting on the chopping block or the buy more block, depending on how their earnings go in 13 days. The stock operates as a leading fixed income and trading platform, connecting investors to broker dealers. Basically, they work in the bonds industry, a $140 trillion industry. And the stock is available for paying subscribers. If you're a free subscriber, you can go paid by going to thesimpleside.substack.com/subscribe, and you can go paid there. If not, we will see you next week with more portfolio updates, with more politician trades, with more insider trades, and more market information. We will also be sending out a quick stock update midway through this week. It's just going to be a stock analysis for all subscribers, and you can go and check that out on Wednesday when that releases. We'll see you then.